Are we in the sellers or buyers market? Welcome back everyone to my channel. Today we are going to look at some of the real estate data to show with you, to prove with you whether we are in a seller's market or a buyer's market. Because obviously if you follow the market trend, you will know that if it's a completely different market, right, between the two. In the seller's market, the sellers has more advantage in terms of negotiation. The price is going to go higher in that market in favor of the seller. However, if we are in the buyer's market, the buyer is going to have more negotiation power and eventually be able to negotiate more on the price. So are we right now in buyers or sellers markets? So let's take a look at a couple of real estate data. So this one, okay, let me show you the screen. So this one right here is the new listing count, okay? Some new listing by month. So this is representing, it's very complicated chart. All I want you to focus on is this chart, the last column right here, which show you the new listing of every month in 2023. Each of the box represent a month. From the bottom, it's January, February, March, April, May, June, July, August, and September, right? So obviously you see, right, everything right now, we have about 7,000 new listing in 7,109 new listing in September, 7,332 in August. So we have about 7,000 every month, 7,000 new listings every month. Now, when you compare with 2022 level, okay, is actually more, right? You see here, 2022 level is actually like the 2022 level is actually more than the current. So let's say right here, right? Right here, actually, September of 2022 is 8,832 versus 7,109. So, and then August of 2022 is about 9,712 versus 7,332. So, in long story short, all I try to say is that we have less new listing coming onto the market as of today compared to the previous year. Okay. In general, the normal number for the Phoenix, Arizona market is about 9,500 to 11,000 every month. So this number right here is not only less than the previous year, but it's way less than the normal number of Phoenix, Arizona. Okay. However, though, if you see that if you follow a real estate trend, you know that the interest rate is recently increased. Okay, increased even higher. On average, right now is 8.5, 8 to 8.5 already. So it increased more. That means the demand has been dropped since last week. Okay, for that reason, normally when the interest rate goes higher, like that situation, the demand gonna drop. The demand gonna drop because the buyers are afraid of that interest hike, and they don't want to deal with the high interest rate. Okay, in this situation, the new listing is still pretty much the same pace, right? From January to now, it's pretty much the same pace. So it's still having new listing coming onto the market at about the same rate, but the demand drop. The demand dropped compared to previous months, previous week, and therefore, as you know, the active listing gonna go down. Well, I'm sorry, gonna go up. This chart right here showing the number of active listings weekly, and obviously you see here since July we actually see a trending upward in number of active listings. That means more and more houses available for the buyers to choose from. That means it's going to take longer time for a homeowner to get their home sold in this today market, because obviously you have to competing with other houses on the market. Okay, so this is increasing the active listing increase, and that also means the home price going to drop. Okay, the home price going to drop for that reason, because when the demand goes down, this number of supply goes up, the home price has to go down. So let me clarify. When I say it goes down, it's not gonna go down like 10, 20%, 25%, right? It's not going to be that much. All I'm trying to say is that the pressure on home appreciation is actually reduced, right? Is actually reduced. That means we don't have a lot of the home price doesn't have a lot of push to go even higher than home price. Maybe it's just gonna be a little bit more balanced, a little bit um, the reduce, right? But it's not gonna drop crazily. Now let me show you one last chart. This chart showing you the comfort market index as of October 5th. Okay. First of all, obviously you notice all the moving is moving toward the buyers, right? Reduce means toward the buyers. If you follow it from 90 to 110 is the balance market. Okay. Anything above 110 is a seller market, and everything below 90 is a buyer market. Obviously, you see last month as of this time of last month, right? All are like there's only one city, which is Maricopa, is a balanced market. Everything else is a seller market. However, as of today, we see that Buckeye, Green Creek, Goodyear, Maricopa already Buckeye and Green Creek already in the balanced market, and Goodyear and Maricopa are very close to the buyer market. Everything else, luckily, is still in the seller's market. However, you see that they also reducing. Okay, Chandler is still number one on the list, which is good for homeowners in Chandler, landlord in Chandler in general, right? Everything else, although the negotiation of the power of negotiation for Chandler market is also dropping up 25%, which is a very significant drop, right? That is actually the largest drop compared to all the cities. Okay, so long story short, right now we are still in general, we still in the sellers market as a Phoenix as a whole, right? But we are moving toward buyers market. Okay, buyers nowadays, even though you have um, uh, the high interest rate. However, your negotiation power is actually improved in today's markets because the seller has to be competing between more active listing on the market. You do have more negotiation power, a little bit more, right? Negotiation power, especially I would advise you as an investment standpoint, as an investor agent, I would strongly advise that perhaps you're looking into a house that potentially longer time on the market with an easy fixed job done after escrow, right? Some houses that in the distress situation, right? Those are the house that you can even have a stronger negotiation power, and therefore going to be much better for you to negotiate the price. Okay, of course you have to account for the repair that you have to do after the fact. In this situation, an experienced investor agent can help you out to give you an estimate suggesting whether it is a good idea to move forward with the house, right? We choose a less attractive house so that we don't even have to dealing with competitor. Okay, we don't have to dealing with other buyers competitors, but we are able to negotiate with the seller even more. Okay, as for the seller, okay, be less confident about your home price, about your home, okay? Be less confident about your home because right now you have to competing with other houses on the market even more. So if you absolutely don't have to sell, don't sell. Okay, hold it, maybe convert it to a long-term rental. If you don't want to commit to a year, perhaps do a short-term rental is going to be better. So those situation is going to be much better for you to stay. Now, if you do have to put your house on the market, I would recommend prepare the house better, price the house better. The attractive house on the market is still getting multiple offers situation. For example, recently I just lost my buyer's offer, unfortunately, to another buyer because the house is super nice, is well prepared, priced very well, right? There's multiple offer situation, and unfortunately we lost. But I just want to point out that it's still doable. You have to be less confident about the house and do more work. Real estate agent should be able to advise you some work that you can do and approximately how much, right? So that you know how much invest that you have to put into the transaction. All right. So thank you so much, everyone, for watching. I hope that my information is useful to you. If you have any question about a seller or the seller's market or buyer's market today, just feel free to let me know. Contact me. My phone number 602-515-2442. Thank you. Bye-bye.